Hey everyone, it's Austin Solomon, the Solomon Group at Coldwell Banker. Welcome to this week's episode of the Real Wausau Real Estate Show. Today I'm joined by none other than Kevin Isle, People's State Bank commercial lender. Kevin, how are you?
I'm doing good, Austin. I appreciate the chance to be on here, and I've been looking forward to it. So I'm happy to be here.
Good. We're happy to have you as well. So tell us a little bit about yourself, Kevin. Commercial lender at People's State Bank. Tell us a little bit about yourself.
Yeah. So, I've been at People's for about 5 or 6 months now. But kind of going back to earlier on. I grew up in the small town of Gresham, which is about probably 45 minutes east of Wausau on 29. Grew up there, graduated from high school there, and then moved to Point for undergrad and graduate school. I met my wife, Jordan, who is a speech therapist at the Achieve Center here in Wausau now.
Sweet.
And we recently moved up to Cronenwetter from Stevens Point back in May.
Yep.
And Austin did a great job as the realtor, helping us out with that. So
they got a great buy.
We did, yeah, for a first house. I mean, we did everything we could, and we got in under asking, surprisingly enough.
And a home inspection. We even got a home inspection.
We got a home inspection.
Under
yeah,
ask home inspection. Unbelievable.
Austin's the real deal.
Yeah, so you're settled in there now, and you've been working at People's for 5-6 months, and taking names and making things happen.
I'm just doing my best.
Yeah.
So I was in banking for about just over a year at a community bank down in Point.
Yep.
Prior to coming over to People's, and I was an analyst there for a year. And then I just started lending at this other community bank down in Point, and I was doing that for about 3 months when People's approached me, and I decided to take the leap, and I've been thankful ever since.
That's awesome. Awesome. Cool. Yeah, so talking about a couple things here on the show, tell us a little bit about what does the day-to-day look like for you?
Yeah, that's a really good question. No 2 days are the same.
Right.
Some days I find myself running across town collecting documents, getting signatures, going back and forth over emails with customers and prospects and other people's employees, and it's always a battle, but it's always a good battle, and there's a ton to learn. It's just like with any industry that you find yourself in, just like in real estate, it's a really deep kind of industry to find yourself in banking, just like it is in real estate. So,
right.
I spend the majority of my time developing business, servicing current People's customers, ones that I've brought on and ones that I've taken on just over the months. I also help quite a bit on the deposit side. So usually commercial bankers, they're also called commercial lenders or commercial loan officers.
Yeah.
So lending does take up the majority of my time and probably the majority of commercial bankers' time. But we also do help quite a bit on the deposit side. So we have a treasury management team that helps all of our customers with their deposit services.
Sure.
And
sure.
there's a pretty significant importance when it comes to businesses and their deposits, because they rely on us for ACH and payroll and fraud security. And so I guess in short, it's always something different every day because you have a broad array of customers, and there are infinite things to do to help them.
Right. Absolutely. That's good. That's good. All right. So what is, as a commercial banker, what does that commercial, entail? Obviously we do a lot of residential business, land transactions, and some commercial as well. What does the commercial entail for you?
Yeah, that's a good question. So commercial, in short, basically means anything for business use. Anything in an LLC, any business that files as an S corp, basically any person or entity that is doing something to create revenue is a commercial customer.
Yep.
So sometimes I hear, well, I don't have my duplex or my fourplex in an LLC. Is it still a commercial customer? Yes, it is. So you can have rental properties, which we're going to talk about in a little bit. You can have those in your personal name or in an LLC. I would highly recommend an LLC. I'm not going to give legal advice, but I can talk about that later. But basically, any person or entity that is operating to create revenue would be a commercial customer of a bank.
Got it. Makes sense. Yep. And as far as like investment opportunities go and properties, obviously lots of options. There's the more like the multifamily, which would be your duplexes, triplexes, etc. Tell us a little bit about when does it draw the line between like a residential loan, like for duplexes, triplexes, and quad, right? You have an option of doing more of a residential loan if you're going to live there, right?
Yeah.
But then when does it become more of a commercial?
Yeah, so there are loan programs. Like I think Fannie offers a loan program. I'm not sure about Freddie, but there are certain conventional options that will allow you to purchase a rental property that is partly occupied, partly non-owner occupied. Excuse me. That will allow you to obtain residential financing.
Yep.
There are pros and cons to that.
Yep.
There are pros and cons to commercial financing, as we talk about investment real estate specifically. So I would say the biggest advantage for residential financing, in quotes, for rental property would be the ability to have a long-term fixed rate. So, we hear about 30-year fixed rate mortgages.
Yep.
Now, when we talk about a property that's partially occupied by someone that isn't the owner, then we tend to look at term lengths kind of shrink a little bit. So I think a 30-year option is out there.
Yep.
There are some pretty stiff requirements to meet. So in banking, we talk about boxes. There are big boxes and small boxes. And on the residential side of banking, there are small boxes to fit into that can be difficult for some borrowers based on credit score,
Yep.
based on financial backing, based on down payment, X, Y, and Z go down the list.
Yeah.
One of the biggest advantages of commercial financing is those boxes become a lot bigger. So we're not going to require capital reserves like a Fannie loan would require. We're not going to necessarily have like a minimum debt service coverage ratio, and I can explain what that is in a little bit.
Sure.
Basically, the requirements are less, and they are we're just a little more flexible.
Right.
We also tend to be a little more cost effective.
Yep.
And we also tend to close loans a little sooner as well.
Nice.
Since all of our decisions are made in house. So we're not financing commercial loans and shipping them off to Wall Street.
Right.
Those are staying right here in Wausau and Minocqua and Rhinelander. Those are all staying right here.
That's awesome. Yeah. Right. So if there's like a punch list or a checklist of like 15 boxes, right, for a normal residential loan, right? Hey, we have to meet these things. For you, it's maybe like, hey, we have some basic boxes that we have to check, but if they don't, right, then we can still do this, this, and this to make things work.
Correct. That's right. So I mentioned a debt service coverage ratio or requirement. That's basically taking your cash flow divided by your contractually obligated loan payment.
Okay.
And some of these residential loans, they can't even rely on projections, which makes it difficult to purchase a property. So it works to refinance, but to purchase a property, it can be difficult. So on the commercial side, we can use projections. We can rely on other pieces of collateral to support a purchase.
Sure.
We can look at a lot of different ways to be flexible by adding additional guarantors.
Yep.
By having other ratios in place to protect the bank. And essentially just commercial financing just allows consumers to be a lot more flexible.
Right.
We're not going to be as tight on credit scores. They're still important, but they're not as important. We're not going to disqualify anyone, usually just because of credit score.
Sure.
But so yeah.
That's nice.
Yeah.
Yeah, yeah. So a couple things to unpack. So as far as tell us a little bit, like going back about the interest rates, right? So a residential loan is like a 30-year fixed rate most of the time. You can do a 15-year.
Correct. That's right.
Tell us about how the commercial loans vary from that.
Yeah. So this is a question that I get quite a bit from prospects and some customers, and so there's a pretty decent disparity when it comes to. Austin's taking a drink of his water now. So the biggest difference is in residential financing, your term and your amortization always match. So if you have a 30-year fixed term loan, to purchase a house, you are paying off a loan over 30 years. And if you have a fixed rate mortgage, then your rate will stay at 3.25% for the entirety of that loan.
Yep.
On the commercial side, when we talk about real estate specifically, so different than dump trucks and different than than big pieces of equipment, stuff like that.
Yep.
That's a completely different conversation. But for real estate specifically, our term loans are going to be much shorter because there's an inherent risk with investing in real estate that isn't occupied by the owner, right?
Yeah.
So
Yeah.
when you compare, let's look back to the, let's look back, 13 years of the financial crisis.
Yep.
If you have a duplex and you have your home loan, and you're struggling to make payments on both, which one's going to go first?
Oh, the duplex.
For sure.
Yeah.
Because you want to protect you and your family. So
For sure.
There were people swinging by the bank, dropping off the keys, and we're saying, "Here, this is yours now."
Yep.
And that's a really tough spot to be in for the bank.
Right.
And we've seen that happen, and it was catastrophic for thousands of people.
For sure.
So when I talk about inherent risk, what I'm implying is our term lengths tend to be much shorter than 30 years. So another risk involved is interest rate risk. So rates are always moving.
Yep.
There's a benchmark rate called the prime rate,
Yep.
which is currently 3.25%.
Okay.
It hasn't moved in well over a year now, probably. And that's kind of the rate that is used on the commercial side to be a good starting point for a lot of rates.
Yep.
So kind of going back to shorter term lengths for commercial real estate loans, we typically look at like a 3, a 5, a 7, maybe a 10. Some banks or credit unions will do 15 years.
Okay.
But usually if you're getting out to like 15 years, your rate's going to be decently high. Because like I said, there's interest rate risk where a bank is locking up money for 10 years.
Yep.
And they are getting a rate of return on that loan. So let's call it 4%.
Mm-hmm.
In 10 years, interest rates could be 8%.
Right.
Look back 5 or 6 years now. I mean, they were much higher than today.
Yep.
So when you lock up that much money for that long, there's a risk with that, and there's a risk with just the psychology behind owning a property that you're not living in.
Yep.
So
Right.
to kind of walk through an example is so a very standard term length on a commercial real estate loan, so like a duplex or a quad, would be 5 years.
Okay.
Fixed at today, 5 years probably fixed between 3.5 and 4.2%.
Okay.
That's where rates tend to be today.
Sure.
And let's say you have a 20-year amortization, so you can compare that to a residential loan where it's fixed for 20 years.
Yep.
So the only difference is after 5 years, your term is up, but you'll still have 15 years of payments remaining to repay that loan.
Yep.
Right. So after 5 years, there's then a maturity event
Okay.
or a renewal that takes place.
Yep.
And then in 5 years, going forward to 2026 now, when rates are higher or lower, then they would then fluctuate with the market.
Sure.
So
See, that's interesting. So and I'm going to unpack this a little bit further. So so as an agent, if you ever look at, like when I look at the amortization schedules, right? So this is, like you had said, what portion of the loan.
it's the pace at which the loan is paid down, correct?
Yeah, exactly.
Yeah.
That's a really good way to describe it. Yeah. So over the course of the first 5 years, right, in a 30-year loan, you might pay down on a $100,000 loan over the course of the first 5 years, right, or 1/6 of that $100,000 loan amount. You may think, I don't know what 1/6 of 100,000 is. What is that, like? I don't know, 18?
17, 18.
Yeah. So anyway, you'd think, okay, well, if it was linear or proportional, you'd pay down 18,000 over the course of the first 5 years. But that's not how it works.
That is not the case.
Right. It's more like probably $6,000 that you paid down in the first 5 years, right?
Ballpark, yeah, something like that.
Yeah. So tell me how that factors into. Is that the same in the commercial space too? Is it's amortized over that, we'll say 20 years, but then in 5 years your term is up. So the term is up. That just means like, hey, now's the time where your payment and your interest rate may change, right? You're no longer locked in.
Like after the initial 5 years?
5 years,
Yeah,
yeah.
that's
Yeah.
right. Yeah.
Okay.
So if you were to keep the same loan at the same bank for the entirety of 20 years, call
Yeah.
it,
Yep.
and we do 5-year terms back to back to back to back.
Yep.
Then yes, the same methodology would hold up.
Got
That's
it.
correct.
So
yeah.
your payment would kind of just change four times.
Yeah.
Got it.
Unless rates stayed exactly
Unless
the
they stayed
same,
the same,
which
okay.
which is very unlikely.
Yeah, that makes sense. So, and that's a good way for you as a bank, like you can kind of mitigate some risk.
That's right.
Yep.
That's exactly it. And
Yeah.
And some customers, like let's say rates go down,
Yeah.
they can elect to keep their payments the same
Yep.
and pay down their loan sooner.
Okay.
So
Nice.
so
It
just
could be
before
a benefit to them too.
exactly, yeah,
Right.
and ultimately we like I'm not just saying this because
Yeah.
I'm in the profession, but ultimately we do everything we do to help our customers, right? So,
Yeah, yeah.
So we have an interest to our shareholders,
Yep.
and we have an interest to each other as employees,
Right.
but our biggest interest is our customers,
Right.
And that
Yep.
should be throughout the industry.
For sure.
So
Yeah.
yeah,
But you still, at the end of the day, too, you have to take care of the bank. Like, you can't just give away the farm.
correct.
Yeah.
That's right, and it's I think it's difficult to kind of step away and understand that.
Yeah.
Just like it'd be difficult for me to step into your shoes and think, you know what, well, if I was a realtor today, I would do this or I would do that.
Right,
But
right.
I don't have your eyes to see from, right?
Right, right. So,
So-
like, hey, Austin can drop his commission for me. He knows me,
Yeah,
Just do
right.
it for free, just
Yeah.
to do me a solid.
Exactly, yeah.
Just like someone's like, hey, could you give us, a little bit, could you knock a point off the interest for us? And you're just
Yeah.
like, no, we've never done that.
Well, so kind of going back to the difference between commercial and residential.
Yeah.
Commercial rates, we have plenty of room for negotiation. So
Sure,
plenty
sure.
is kind of ambiguous, but
Yeah.
we always start with a point and we negotiate from there. So,
Sure.
Rates are going to depend on a lot of things.
Yep.
Ultimately, they depend on risk. Well, how do you define risk, right? So,
Yep.
risk is kind of defined by the financial backing of the owner or the guarantor.
Right.
It's gonna depend on the type of collateral that we're holding. It's gonna depend on the size of the down payment.
Yep.
It's gonna depend on the location, the industry. So, if you compare storage units today versus new hotel construction today, in the middle of 2021,
Yep.
you can kind of see where I'm drawing there. But so yeah, I mean, there are a ton of pros and cons to both. It ultimately it's kind of driven by what works best for you.
Yeah. Right. No, that's good. That's really good. Yeah. Okay, so let's just give a quick example for our audience. If I'm looking to purchase a fourplex, okay, and it's $300,000, what kind of down payment are we looking at, like as a minimum traditionally for something like that, and what kind of loan term and obviously I know there's some flexibility and amortization are we looking at? Let's just spitball some numbers here.
Sure, yeah. So let's say we got a $300,000 4-unit
Yep.
here, just planted in the middle of Wausau. So let's assume that the location is pretty good. Let's say the property is
B plus.
B plus. Okay, so B plus. So we'll call it maybe 30 years old.
Yep.
And it's in pretty decent shape. Let's say it's occupied. Rents are at market, right? So let's assume that. So typically in something like that, we would look at being at least at an 80% loan to value position or less. So
Okay.
the reason I say loan to value versus down payment is because there's a difference. So something we can do on the commercial side to be a little more flexible is we can have someone put down 15% and then maybe pledge another property as collateral to shore up that additional 5% remaining. So it's pretty common to see 20% down, 25% down, depending on the property, its condition, where it's located, those things. But so it's very standard to see 20% down.
Yep.
That's kind of industry wide for commercial for like a 4-unit.
Sure.
Term length, like I said, I mean, you can go as short as 1 year.
Yep.
1 year is going to have a super low rate. I mean, like low threes, probably low to
Okay.
mid threes. But again, that's only fixed for 1 year. So
Sure.
a year from now, they can be higher. So
Yep.
so I see anything between 1 and 10 years probably for terms, and then amortization on a building like that, we're talking 25 years. So
Okay.
we're getting pretty close to the 30-year mark on the residential side.
Sure. Sure.
25 is pretty good on the commercial side. And not every bank will even go to 25 years.
Yep.
A lot will just go to 20. So 25 is usually pretty good.
Okay. Cool.
Yeah.
All right, that's not too bad. Now, you would look at that. Now, can you count, let's say it's all occupied, right? And let's just say, this property in particular, rents are $700 per unit, right? So $2,800 per month gross rents, and let's say that all the other expenses are fairly standard.
Yeah.
So that could be that's actually probably like a realistic example, right? Now, if the borrower, if let's say they're, obviously you're looking at a ton of things, right? Can they count that income? Does that look attractive to you? Like, hey, there's obviously $2,800 of gross income coming in. each month, like that certainly would help you guys. That looks attractive. Like, hey, we can kind of count on that.
Yes, it certainly does. Yeah, I mean, that's basically like we look at how the bank is repaid. So we have a primary source, a secondary source, and sometimes we have like a third repayment source.
Yep.
So our primary resource of payment for purchasing this $300,000 quad is cash flow from that rental property. So we take the cash flow of that property into account as much as anything else. So that's super important to us. The second source of repayment, on average, is going to be any W-2 wages from the owner, any additional outside rental income, things like that, and then basically the final way to get paid usually is selling the property.
Yeah.
Which is we don't want to do that.
Yeah. Right.
That it's kind of a nightmare for everybody.
Yeah.
It just takes a lot of time, a lot of money, a lot of effort on both sides, and it can get ugly, but that very rarely happens because on average people are good people.
Yeah.
People repay their loans. People come and tell you when there's something going on. When there's, if there's an issue with their recurring income stream.
Yep.
They're transparent, and that helps us help them considerably.
Yep. Yeah, because then you can look into things and be like, hey, consider this or consider this.
Yeah, like let's look at interest only for a little bit. Let's try to figure out maybe we can stretch out your amortization a little bit longer to make your payment smaller.
Right.
Let's look at those kind of things, and that's something where when you compare community banks like People's with large banks, we all see them all over the place.
Yep.
Large banks don't offer that flexibility, so they can come and they can put the loan in default and pay us 30 days.
Yep.
Which is super stressful for borrowers.
Right.
So yeah.
That's interesting. Let's talk a little further on that, because I always obviously keep it local, right? Like that's kind of something I'm big into. Yeah, and obviously there's a lot of like online lenders that are popping up too. A lot of people that are or a lot of these bigger banks, right, that are options. Talk about like some of the pros and cons. My thought is personally is like you had said, it's the customer experience and the flexibility. Like you can kind of go and meet with someone, them, you can kind of, if you run into issues, right, like you had said, you can have a conversation and try to figure stuff out versus, hey, if you're like just a number on a $1 billion, not even billion, like $1 trillion balance sheet, like it just, again, we're talking more of that, hey, if this happens, then we do this, this, and this, no matter what, kind of.
That's right, yeah.
Right, versus on the more personal side of things, with you guys having more of a kind of a care for your customers, you have a little more flexibility.
That's right. That's totally true. Yeah, I mean, we don't look at individuals like numbers. We can see beyond a balance sheet and see that, hey, this guy owns a farm or next to my cousin, or this guy knows Austin Solomon, he sold him his house.
Yes.
We can tie those local, I guess, happenings together. And that allows us to kind of maybe have like a little more unique perspective compared to maybe some of the bigger banks that are there to just generate volume and push out as much business as they possibly can. So, we understand the areas that we serve really well.
Yep.
We've been here for a very long time.
Yep.
We try to serve as many people as we possibly can. We try to be as flexible as we possibly can.
Yeah.
And at the end of the day, we're parked on Stewart Avenue. We have locations here in Wausau, up in Minocqua, Rhinelander. I mean, we have several other ones as well. But at the end of the day, we're a community bank serving communities. We're not out to chase every single deal. We're here to help our own people.
That's awesome.
Yeah.
Kevin, let's end on a fun note here. Give me you got a story or anything that would be valid to share? Just kind of a funny story or fun success story.
Yeah. I do. I don't even think I've told anyone else's story before.
And he's doing it on the air.
Exclusive content on the reel, yeah.
All right, I like it.
Only my wife knows because she was with me. So, in my first month or two of lending back in, I say this like it's 10 years ago. I mean, this was like 6 months ago. I mean, this was
like
back in
May, March, April, right?
This was actually probably February because there was still a bunch of snow on the ground. So,
okay.
One of the first larger prospects I had down in Point, it was a referral from a gentleman I used to work for, and this referral was a really, really nice guy, and I was really just getting to know him well, and he was he was offering me a really nice piece of business, and this guy he owns several properties around Stevens Point. So he owns some storage units, and he owns a laundromat, and he owns just all sorts of stuff.
Okay.
Some rental properties, and he's just a really nice guy, and things were going along really well.
Yeah.
And I was just really excited. I was just this young lender, and I finally found a nice little piece of business for myself, and
Yep.
fingers crossed. And at the time, my wife and I lived in an apartment in Point, and we had coin operated laundry, and occasionally we would run out of quarters, and this specific time we ran out of quarters on a weekend. We couldn't go to the bank and grab some quarters, so
Yeah.
what we would do is, and this is terrible. I don't, like I feel bad saying it because you're not supposed to do it, but
Yeah.
we would occasionally have to pick a random laundromat to go take $20 worth of quarters from.
Sure.
But
sure.
unfortunately, we weren't putting the quarters back into their machines, which is what they're intended for. So, it is what it is. Like, it didn't make us happy, but just in the moment, we had to do it, right?
So how did you get so what did you do to get the quarters?
So this is in the middle of me bringing this guy over to this community bank that I used to work for.
Yeah,
and
yeah.
We were just having a great time, like I said, and things were going along really well. Well, I ended up going to a laundromat, just kind of a random one that we kind of cycled through because there were like 4 or 5 in Point, and we just picked this one random one.
Yeah.
Well, it turns out we pull into the laundromat parking lot, and I go to walk in to get some quarters out, kind of feeling bad about it because I'm not taking anything, I'm trading them $20 for $20, right?
Oh, yeah.
But I'm not using the money there, which is what it's intended for. So
Yeah, it makes sense. Yeah.
as I'm getting out of my car to walk in, I see this gentleman that I've been working with,
Oh, man. That's
and
funny.
it turns out he just bought this laundromat.
Oh, that's awesome.
And I just felt mortified. And I go in there and I take the quarters, and I'm just like, I'm just blushing, and I just felt so embarrassed, and in the moment I wasn't sure if he completely knew who I was or not,
Yeah.
because like we had just kind of started getting together, and like we'd only met a couple times at that point, and like I had a hat on and a jacket on and wasn't in my suit or anything, and we actually ended up like never really talking about it.
Oh, that's
Like-
funny.
like
So
it
did
never
he see
came
you?
up?
Did he see you there?
So I think he did, but
Yeah. You
I don't
never-
know
you
if he
didn't
was
call
able
him
to
out?
confer mentally if it was me or not.
That's
so,
awesome.
So yeah, that was really awkward, and
Yeah.
it was still a positive outcome. We ended up bringing on the business, and
That's awesome.
we never had to speak about that awkward moment.
That's great. Okay, now I'm putting the pieces together because I've been fortunate. I've never actually done laundry at a laundromat, but it makes sense. So you go and you take a $20 bill, right, and you get change for it.
Yeah,
That makes sense, right? Because it's
So-
all coin op.
correct. So
Yeah.
so I took the quarters and brought them
Yeah,
back to our
makes sense.
back to our apartment to use them.
Makes
yeah.
sense. That makes sense. And you kind of just felt like, it's kind of like if you go into a gas station and use the restroom and stuff, but you don't buy anything.
Yeah,
You're
yeah,
just
like
kind of like, what?
Like, it's not unethical. It just
Yeah.
feels a little wrong.
Yeah,
And-
I know exactly how you feel. Yes. But that is funny. So you saw this guy there and you're probably like, oh man, like, what do I do?
Yeah. Like
He's like, I'm going to play it cool.
I just got in my car with my wife, and she was kind of laughing, and
That's so
we
good.
backed out, and I stressed about it for the rest of the day.
Yeah.
And
yeah.
it never ended up coming up. So
Yeah. I can relate to that too because I typically have a good ability to like remember clients, like if I see them in the grocery store and stuff. But then obviously like this last year, when there was masks on and stuff, it's like, man, like I have no idea who, like, do I know that person or not? And then you're kind of looking at them weird. And then you're like, I stress about that kind of stuff too. They're like, but what are you going to do?
yeah, right. I mean,
That's good.
yeah.
It's awesome. Well, hey, thanks for joining us on this week's episode of The Real. I think our customers the customers, the podcast listeners will glean a lot of information from this. And we'll include your contact information. So if they're looking to do a commercial loan or explore some of those things, they can get in touch with you.
Sounds great. Yeah.
Yeah. Thanks for being on the show, Kevin.
Yeah. Hey, thanks for having me. I appreciate it.
You bet.